Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit HomeGain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to HomeGain.com. Welcome back, everyone, to Real Estate 360 Live. I'm your host, Ryan Sloper, joined by my guest, Cammarosano, the general manager of HomeGain. Quick reminder, Real Estate 360 is designed to build the Washington, D.C. Metro's housing and credit markets. If you guys ever have any questions or concerns or real estate needs, whether it's, you're trying to obtain a loan modification and just need some help getting pointed in the right direction, whether, it's seeing if you're qualified for HARP 2.0 and finding out if your mortgage is owned by Fannie or Freddie to see if you do qualify for that program, reach out to me. I'd be glad to point you in the right direction. Like I said, if I can't help you out, I'll be glad to point you to a professional that can. It's 877-245-2030. It's 877-245-2030 or via the web at realestate360live.com. So it's time for this week's Market Movers. This segment was brought to you by HomeGain. HomeGain is the place to get you started buying or selling a home, finding a realtor, and getting real estate questions answered. If you go to homegain.com today to see what I'm talking about, all you have to do is type in your home's address, and you will get an instant free estimate of your home's value online. It's a great way to monitor your home's value, and it's totally free. So check that out today at homegain.com. So this week, as far as what's on deck that can move the markets and move interest rates one way or the other, on Wednesday, the Fed minutes will be released. On Thursday, the weekly jobless claims will be released. And on Friday, the consumer sentiment will be released. Now, do I think that any of these things will have a big move things one way or the other? Possibly. And the reason why possibly is because rates have, they've basically sunk down to extreme historical lows, and any little positive sign of anything good in the economy, Wall Street's going to grab a hold of it and run as far as they possibly can.
Isn't it the reverse, though, Ryan, that if there's bad numbers, then conversely, they'll take that as a good sign because they'll think that the Fed is going to come to the rescue and print up more money to save the economy?
Well, let's just say that weekly jobless claims comes back and they're good, right?
That'll help. But if they're really bad, it will also help.
It's because right now we're in such a weird point in time where what used to be the case is no longer the case, if you know what I mean. Where we used to be able to get a clear read on if this number comes in at that, basically you can bet on interest rates going one way and the stock market going the other. It doesn't typically happen that way because it's two-pronged now. It's like, okay, well, what is the report? And then what did the Fed say about the report? You know what I mean? Or are we getting any indication of what the Fed thinks about that report?
Which highlights that the Fed becomes the market instead of the market.
Absolutely. And it's like, you know what? The Fed is becomes so dependent upon the Fed backstopping everything that they're afraid to make any decisions, investment decisions, or trying to figure out where the economy's headed, is what's going to take place with employment, without deciphering every last word that the Fed says. They're constantly looking for some sort of language or hint that they're going to do something. I just it really boggles my mind, but more or less what I'm really saying is that, any of these reports, Lewis, we could sit here and guess what they're going to come out with. I mean, the Wall Street and the Fed will interpret them how they wish, and the markets may move one way or the other, not based upon, typical market reactions. So I would just say that, just be careful if you are in a situation right now and you're just, rates are just ridiculously low right now, and I just don't think it's worth risking certain reports coming out and you're losing an eighth or a quarter of a point. To me, it's just not worth it. There's nothing major that I see, obviously, other than what's going on in Europe. There was an interesting little article written by Sheila Bair, contributor for CNN Money, basically where she was giving what she thought her analysis of where Europe stands right now and how it related to where the United States was back in the fall of 2008. And she went into detail and said that, it's right now, and like especially in Greece, there's been what they've been calling, not bank runs, but jogs, where people are going in and pulling significant amount of cash out, which is basically forcing the banks to become somewhat insolvent. her worry was that, what happens when everybody, especially Greece, because they were considering if they exited the Eurozone, they wanted to pull all those euros out right now, to not risk their currency, switching over and losing, like half the value of the money. So I'm going to be curious to see, what takes place here. Obviously, I feel like the Fed, or there's going to be the European Central Bank and European Commission, they're going to be stepping in somehow and create something like the FDIC, which we have here in the United States, to give them to give consumers some sort of protection, or at least perceived protection. Just because I don't think that any sort of run on any of these banks in Europe right now would I think be very detrimental. What do you think about that, Lewis?
Of course, it wouldn't be detrimental, but it wouldn't be helpful. However, it does make the U.S. dollar and the U.S. finances appear stronger, which is temporary good news for the United States. But, I just read something where the debt-to-GDP ratio in Spain is 68%, and in the U.S. it's 103. So all of that perceived safety in the U.S. is not having, we don't have the same debt problems that Europe has is entirely false. But for now, it's worth taking advantage of that U.S. interest rates are low as a result of people flocking to the U.S. treasuries for the perceived safety and for the Fed buying them, keeping the prices down and keeping interest rates low. So the more problems they have in Europe, the more the spotlight is kept off the U.S. problems, and the more the U.S. is perceived as being safe, and therefore interest rates stay low. So you might as well take advantage of that misperception while it lasts.
Yeah, and I mean, more or less, this Europe situation's been going on for some 2 years now.
Because people are focused on it, Ryan, because they've had debt problems there for years, and so has the United States. The market has just decided that they're going to focus on Greece and Spain, then they'll start focusing on Italy. Eventually, they're going to start focusing on the U.S.'s inability to pay back its debt.
And that's only a matter of time,
I'm surprised how long it's taken.
I am too. I'm actually shocked. I'm amazed. I don't know how this continues, other than the fact that
there's no alternative, Ryan. The only alternatives are gold and silver, and they're thinly traded, and they're very volatile. So people still like the U.S. dollar and the U.S. treasuries as a safe haven.
Yeah, and there's only
the fundamentals aren't necessarily safe.
And there's only a handful of states that have that are currently recognizing gold and silver as legal tender right now. As more and more states maybe would do that and open things up, I don't know. I don't know what it would.
Yeah, but you see, the banks have no interest in highlighting non-paper assets as being valuable, because it would make what they're doing appear to be irrelevant.
Yeah. Well, it's, the whole, fractional reserve banking too. It's the fact, okay, well, if we all decided that we all wanted to run to Bank of America, PNC, whoever you bank with, and everybody wanted to pull their money out, they couldn't give it to you. They couldn't give it to you.
It's funny, they can't give it to you, but technically they could, because the FDIC would just go and ask for the money, and they would print up the money and eventually give it to you, but it would be devalued.
Right. Yeah.
It would be based.
Yeah, because I always find it interesting. Like if you ever try to pull large cashes out, depending upon what the bank is, they'll say, "Oh, well, you need to call ahead for us to do that." We don't tend to keep that kind of money. And then some of them, I actually had a client one time that was going to pay all cash and wanted to bring the actual cash. Don't ask me why, but it was like $200 and some thousand. They told him it was going to be 30 days before he could get his money.
Well, they give you the whatever degree it is to try to get you to answer. They really don't want you to take it out. I remember once I had a CD due, and they kept asking me what I was going to do with the money.
Right.
It's none of your business. I'm taking it out of the bank and I'm putting it somewhere else. Then they, of course, they have brokerage services. They can put you in another CD. It's very hard to take no for an answer. You say, no, I'm just going to let it mature. I'm going to take it, and I'm going to write a check and getting out of here.
I know it's like an investigative practice they got going on at the banks. They ask you a zillion.
It's their money, not yours, I guess, is how they look at it.
Right. Yeah. It seems like it's completely theirs. Once you give it over to them, it's like they don't want to relinquish it.
Well, you know why? Because it's worth, as you mentioned, the fractional reserve banking.
10 times.
10 times the amount.
Yeah. Yeah, and they've already leveraged it to the hilt for sure. There's not many banks that aren't leveraging it all that full 10 times there. Interesting. I want to kind of switch gears here. There was an article that was in Housing Wire, which was eminent domain in the Supreme Court in California. There's a proposed plan right now to help underwater borrowers in California that's making its way through several local markets. That is, sparking a lot of outrage from people who believe that lawmakers could end up violating private property rights and using upside down borrowers to basically what this amounts to is that they were trying to pass a law that would allow the government to use eminent domain to seize underwater mortgages from investors through banks or whoever owns the mortgages, allowing officials to gain possession of the mortgages and then restructure the loans to help borrowers. Now, this is crazy to me, but I just wouldn't put it past them. I mean, if they, once again, I think that the big problem that we see in a lot of the modifications is that, if they're not owned by Fannie or Freddie, or also known as the government, if they're not owned by the government, then you can't really do anything. Well, if all of a sudden these, local municipalities were able to use eminent domain to come in and scoop up these underwater notes on these properties and take them and then restructure them for borrowers, that would be the way that they could get around doing it. Now, not a good thing, but I wouldn't put it past them. It's, I believe, Mortgage Resolutions Partners is the one shopping the plan as a cost-effective way to handle underwater mortgages, but obviously the investors are the one taking the loss.
Well, that's what happened with GM. These results-based government actions are really, in a sense, they're totally tyrannical.
Yeah.
But basically, they're just going to say, this is what we need to happen, and because we're the government, we're going to do it because we like the outcome.
Yeah, because they had went back, and I guess they were saying that there was maybe a precedent for this. There was a Supreme Court in 2005, Kelo versus the City of New London case, where majority of the justices had held that a city could use eminent domain to seize private property to sell for private development, since the seizure can technically qualify as public use due to its part in an overall economic plan for the area.
Well, didn't the government do that with the steel mills in the 30s and the 40s? Yep. They have, and there is precedent. The Supreme Court has given them the right to do it. Now, there's certain states, I think New Hampshire is one of them, that prohibits the use of eminent domain.
Yeah, but it seems like, this could be something that we should keep our eye on in the future. It's popped up in California, and it looks like...
You know what else they can do, Ryan? They can just tax them if they don't agree.
Yeah, that would probably be the next option. We're coming up on a break, guys. When we come back, many Marylanders have been moving to Virginia for the last 4 or 5 years. We'll let you know why that's been the case when we come back.